All right, guys, I'm Big Mike. Like always, I'd like to thank you for being here today. Today we have Manesh Patel. I believe this is his third or fourth time that he's doing a presentation on BMT. And today the topic is going to be psychology of trading. And some of the bullet points that he's mentioned to me that he wants to talk about today are dealing with impatience, stopping the revenge trading, eliminating what I call hopium, dealing with greed, building confidence, treating trading as a business. And for any of those that joined the room a few minutes early, they probably heard me and Manesh going back and forth on some of these things that we share in common of how people view psychology. And all I can say before I turn things over to him is that I firmly, wholeheartedly believe that the majority of people that discard psychology as unimportant are doomed to fail. So if I can possibly encourage you to pay attention to psychology and just, trade management and risk in general, and downplay the methodology. Methodology is important, but psychology, in my view, along with risk, is more important. And I bring that up only because, as I was telling Manesh, the attendance rate for psychological type webinars is always so much lower than the attendance rate for methodology webinars, and it really should be reversed. If it were reversed, people would be a lot better off. Okay, so that's my speech, and give me 1 second. I'll turn things over to Manesh. I also want to remind everybody that as you have questions, you can type them into the questions box, and we'll do our best to get everybody's questions answered. All right, guys, hang on 1 second. Here comes Manesh Patel.
Mike, can you hear me okay?
Yeah, we see the PowerPoint, and I can hear you.
Okay, perfectly. Let me just set up my screens to GoToWebinar so I see all the questions and everything too. First, thank you, Mike, for the invitation again to come back and speak. This is a topic I actually love to talk about, but as we mentioned earlier, and some people heard us, not a lot of people take this seriously. It's very unfortunate. A lot of people don't take this seriously, but this, believe it or not, is what's going to really make or break you as a trader in becoming a consistent trader or becoming a fluke trader out there. A lot of people don't think so. A lot of people kind of ignore it, kind of brush it off. And believe it or not, everyone that does, they always come full circle, coming right back to me and say, you know what, Mesh, I heard you speak about psychology of trading about a year ago. I ignored it. I really lost all my money, and I realized that it was all due to psychology of trading. It had nothing to do with my technical system at all. And this is a story that I hear over and over and over continuously. And it's not just here in the U.S., it's around the world. No matter where, if I go to London, Toronto, Singapore, Malaysia, Australia, it's pretty much the same story that you get from every retail trader out there. And it's the same story that I heard 5 years ago. It's the same story I'm hearing now. And it's unfortunate that people are not learning from their mistakes and moving forward, because this is a very, very key aspect. And give me an idea how key this is now is that when we were doing our courses with Ichimoku, we initially didn't even talk about psychology of trading and all that. After the first set of students we had, one of the things we noticed in all our students was that it wasn't the system they had problems with. It was the psychology of trading. Give you an example. We had one student that he was great at finding chart setups, great at entering and everything. But the moment he had a loss, he'll completely break down. And from that point on, he broke down to a point he kept on losing. He couldn't mentally get over that scenario of a loss. And so it had nothing to do with his technical system, nothing to do with his entries, orders, money management, nothing at all. It was a psychology of fear of a loss. It's something, and that had to do with something that happened in his life at an earlier age that he had to overcome. And since he hadn't overcome, it actually transplanted into the charts, into trading. And that's just one example there. So, after we did that, we actually we incorporated psychology of trading in some of the modules that we incorporated in our class you're going to see here today. Believe it or not, after we incorporated this, This has helped a lot of our students move forward and progress forward very, very easily now to a point, you know, them conquering and becoming consistent traders is happening a lot faster compared to before when we didn't teach it. Okay, so this is a very, very critical subject. If you guys have any questions, please stop. Sorry about that. If you guys have any questions, feel free to sit there and stop and ask me as we go along. I'm going to try not to keep this boring, just like every other presentation out there. We've got some key bullet points I want to go through, but I like to keep this as an open discussion, you know, and have it with everyone. If you got some issues, you know, please bring it out in the open, and we'll talk about it and go from there. Everyone okay with that? Okay. Disclaimer. This is our normal disclaimer. I think Mike's already gone for one disclaimer. This is ours. This is our normal disclaimer. We're not really telling you to buy or sell anything. We're not going for any technical stuff, so really there's no risk here at all. So I'm just going to flip for this disclaimer now and go to the agenda. The agenda, we're going to go for three main topics. The first one is statistics. I want you guys to understand the statistics and where you stand in that statistic. And then we're going to talk about the resolution. How do you resolve some of the issues that you see with psychology of trading and so forth? And lastly, I want to talk about this because this is a very, very critical aspect of you becoming a successful trader, which is trading business. And I'll give you a highlight of this. Most people that come to trading, they don't treat this as a business. So you sit there and you trade nilly-willy. If you take trading and turn it into a full-blown business, believe it or not, you'll be very, very successful at it. And it'll actually pay you just like your own business. So you get a monthly income, which will become your residual income for the rest of your life. So this is one key aspect a lot of people forget about doing because they come here into trading, they think they're going to make $1 million tomorrow, so they don't even think about it seriously, and they don't set it up correctly. But you have to set this up correctly in order for this to continuously be a consistent income for you. And notice I'm highlighting the word consistent. Okay, we're not talking about fluke traders out there that make good cash one day or 2 days or 3 days or anything like that. I'm talking about trading becoming consistent residual income for you for month in, month out, month in, month out for the rest of your life. Okay? Peter, I got your question. I'll address it in just a minute. I'm just going to read over it. Okay, so Peter, I'm going to hold off on answering that to the very end because I think most of it we're going to actually get through, and I'm going to answer some of your questions as we go for this presentation. Okay, yeah, Barney will go through that statistics too, military and pilots and all that too. So number one statistics I like to kind of show to everyone is this one here. 98% of retail traders fail. There's only 2% of you guys out there that actually make it from a retail perspective that goes into the institutional world. But 98% of retail traders fail. That means 98% of you guys will never turn this business into a consistent, profitable business. Does that sound good to you guys or bad? I don't know about you, but that's a very, very bad statistics. And this is something we have to turn and we have to change. Okay? And let me kind of give you an idea why this is there. If you think about it, what's the difference between you and an institutional trader? Or let's even get a little more logical. What's the difference between you trading and a computer trading? If you think about it, a computer has an algorithmic procedure of a trading plan which it follows. You typically will have a trading plan too. I'm hoping everyone does, but I'm assuming you have a trading plan that tells you exactly when you should get in, when you should get out, and so forth. The only difference between you and a computer when you're trading is the psychology of trading, the emotional side of trading. Does everyone understand that? There's no way a computer could exhibit emotions at all. They can't exhibit greed. They can't exhibit sadness at all. So a computer is going to sit there and follow their trading plan day in and day out, day in and day out. It doesn't matter if they've got 3 losses in a row or 4 losses in a row. It doesn't matter if they've got 6 big winning trades in a row at all. A computer has no emotions at all. There's no psychology part to computers at all in trading. However, A human being does have that aspect. So if you really want to sit there and trade very effectively, you've actually, believe it or not, got to become like a computer where you cannot go with emotions at all. You can't go with greed at all. You have to become a computer and take everything out of the play to a point you just execute your trading plan, which is based on research. Does everyone understand that? If you guys always I keep on hearing retailers, how do I beat the high frequency trading models? How do I beat the behavioral finance models? Well, this is it. This presentation here is how you first start beating these systems, believe it or not. Because believe it or not, the high frequency models and the behavioral finance models are all based on technical analysis. They're doing a lot of similar things to what you guys are doing. They may do it at a faster basis, but they're doing it without emotions. And everyone knows that retail people, the number one issue you have is emotions. How many times have you prayed to God to help you out? How many times have you sat there double, tripled your positions because you sat there and doing a revenge trade? How many times have you sat there and made $1,000 in one day? You're like, oh, I'm going to have good luck. Let me increase my positions and take that $1,000 to $100,000 tonight. Right? That's emotions talking. If you guys think about it, if you just execute your trading plan, how successful would you be today? That's the number one question you should be asking yourself after the seminar. If you were a robot and just executed your trading plan, would you be successful today consistently? And believe it or not, majority of you will probably answer yes in your mind. Okay? So that's the number one statistics here I want to kind of highlight and I want to point to everyone. Okay? Number statistics. And this is something I tell my students day in, day out, and I continuously bombard my students every month telling them the same thing. 50% of trading is the technical fundamental side. The other 50% of trading is you. So, if I'm teaching a class, do you think I have complete control over you as a trader? No, I don't. I could sit there, turn blue, tell you exactly how I trade technically, and guess what? You as a trader, even though you learn everything I teach you and you implement the same steps as me, believe it or not, you still can fail. Because at some point, you probably would deviate from the trading plan I gave you. So you guys got to remember this model, and you got to sit there and take that you part out of your trading plan. The moment you take that you part out, believe it or not, you will be taking the steps to move forward as a successful, consistent trader. Okay? Now, believe it or not, I'm watching this attendance list because I'm going to watch this attendance list because it's interesting to see how many people will kind of drop off after a while and say, oh, I don't believe this stuff, and they'll just walk away and won't believe it at all. I promise you, if you leave this seminar, this workshop beforehand, I promise you, and this is something I told Mike, and I've seen this over and over and over, you'll come full circle, and believe it or not, one day you'll come back to me and say, Manesh, you're correct. It may be 3 months from now, 6 months from now, even 1 year from now, but believe it or not, this will come back and haunt you if you don't listen to this and take it seriously. Okay? So what are the issues? The biggest thing to overcome weaknesses is first you got to recognize the weaknesses out there. Okay? Once you recognize the weaknesses, then you can figure out how to work around them. Okay? Someone told me, well, why don't you just fix your weakness? Well, guess what? I'm 40 years old. I'm impatient. Do you really think that I'm going to learn how to be patient now at this age? No. So if I can't fix it, what am I going to do? I'm going to work around it. I'm going to make sure my trading plan is structured so that I never go to my weaknesses and I always go to my strengths. Does everyone understand that? Yes? So I'm not really telling you to change yourself. I'm telling you to recognize your weaknesses and figure out how to work around them. Okay? And that's a big, big difference to what everyone else talks about. Okay? So the very first one I'm going to highlight, reason why, this is my biggest weakness, impatience. Okay? And believe it or not, guys are more impatient than women, and statistically it's proven, and I know it for a fact now with all my students. Okay? We're impatient. Okay? For the ladies on here, believe it or not, you're probably patient more than we are. Impatient. Why? You try to force a trade when there's nothing there. The more you look at a chart, the more you'll second guess yourself and fail. Knowing your first instinct is correct. How many times have you guys sat there and looked at a chart more than 3 seconds? The more you look at a chart, the more you're going to fail. Believe it or not, your first instinct is good. If you're sitting there trading live, that means you've sat there and done your research. During your research, you've trained your eyes and your brain to sit there and look at good charts, and you're going to know exactly when to get in and when to get out. If something looks ugly and you hesitate, do you think you should take the trade? No, walk away. But no, most of you guys don't walk away, okay? Because you're impatient. You're sitting there trying to become a millionaire overnight. If you were patient, you wouldn't care if you make money today, okay? You have to learn to be patient. You have to learn to take whatever the market gives you. You cannot force this market to give you profits that it's not going to give, not there. Everyone understand that? Did I lose sound? Okay. Just want to make sure I didn't lose sound. Okay? So you have to learn to be patient. The moment you're impatient, believe it or not, you're going to fail because you're going to rush and do things that are not really there. You're going to sit there and, you know, your trading plan says, look for this setup, but believe it or not, the more you look at a chart, you're going to start seeing things that are not really there. And I have that problem, I'll tell you this now. If I look at a chart continuously, believe it or not, start thinking of glorious things on that chart and start thinking of things that are there that are really not there, right? So what do? And we'll talk about how to resolve this impatience, okay? So Thomas, I'm going to answer how to resolve that in just a minute. Right now, I just want to recognize all the weaknesses, and then I'll show you resolutions. I'll show you how I do this every day and how I set up my trading plan to avoid all these weaknesses, okay? The second is a revenge trade. Now, this is basically when you enter a trade, you get clipped. That means you get stopped out for a loss, okay? And then the instrument goes your way. And you're watching it, and you're like, oh my God, this thing went my way. If only I didn't get stopped out, I would be hugely profitable up at this point. Now you get upset, and it keeps on going. So then you're like, oh my God, this thing's going to go to the moon. I think I'm going to enter. You know what? I'm going to double my size, my position size right now, so I'm going to catch up with all the profits I missed out on and get right back on trade. How many guys have you done that? I have. I haven't done it once. I did a lot. I did a lot of revenge trades. In fact, the revenge trades is what caused me to blow up my accounts. How many of you guys will sit there and continuously blow up your accounts, or you break even at the end of the day, even after some great wins, all because you went in for a revenge trade? Revenge trades will not work, okay? The problem with that is when you go later on in the setup, you're now sitting there taking on more risk and you have less reward. So you have an inverted reward-risk ratio. If you're trading a system that has an inverted reward-risk ratio, you're never going to be profitable at all, okay? It's just a matter of when you're going to blow out your account. Notice I said it's a matter of when, not if. There's a difference between those words I chose, okay? The third one, what can happen to you is you can become emotional. How many times have you prayed to God for a trade to work out? I have. And then you're like, okay, once it works, then you come back to another trade and you do the same thing over again. And you come back to God and say, you know what, God, I know I asked you this before, but now I am asking you again. Okay? And a perfect example, and this is a student that this is a brand new student that signed up with us. A person bought 12,000 shares of Zynga before earnings date. 12,000. And you know why he bought Zynga? It wasn't due to technicals. It's because this student says, I play the games all the time on iPhone. Because I play it, it's got to go up. Everyone's got to believe it. And guess what? The next day, it drops over 20%. This guy lost over $45,000 overnight. Overnight. All because of a personal emotional feeling. How many times has emotions cost you dollar values? How many times have emotions cost you to become negative overall in your account? And if you're saying a lot, guess what? You need to resolve it. If you recognize these weaknesses, why haven't you resolved it up to this point? Why is it taking someone like me and Mike to come here to sit there and tell you this stuff? Let me tell you something. If you want to be a successful, consistent trader like Mike and me, you have to learn from your mistakes. If you're not learning from your mistakes, then you're not moving forward. Remember that, okay? Greed. How many of you guys are greedy? A lot of you guys are. A lot of you guys want to be a millionaire today. Why? Is trading going away tomorrow? Is Mike and me not privileged to some information where tomorrow these markets are going to close down and there's not going to be trading anymore? Or do you really think trading is going to be alive for the rest of your life? It's going to be around, isn't it? So what's your rush? Why not learn things the correct way from the very beginning with small number of contracts so your mistakes don't sit there and cost you a lot of money? And you slowly build up. How about an exponential profit curve? How about not a straight shot up? Why not sit there and start off with $500 and learn how to grow $500? I always tell my students, put $500 into a Forex account, make $500 in profit. When you make $500 in profit, take your money out. And then you're playing with profits. Then you sit there, take that $500 and grow it to $5,000. Once you go to $5,000, now you double your position size, and you slowly go the same route.
Hey,
and you
Manesh.
do that continuously with time.
So we were talking about this before we flipped on the switch for the recording. So I get a lot of resistance anytime that I recommend people start with spot Forex. And, you know, I think everybody is pretty much aware of those reasons, unregulated market and so forth. But I want to see why you recommend it and see if it aligns with why I recommend it. So from what I've experienced, a lot of people start with futures that literally have, well, you know, let's leave the experience out of it. How about, let's say, people start with futures where they have no track record of success. So it doesn't matter that they've been trading for a long time or not. The fact is they're not profitable, yet they're trading futures. Now, to me, that doesn't make sense because futures is so highly leveraged. Now, I know that sometimes people look at trading equities and ETFs and they say, well, the entry, the barrier there is the $25,000 to be able to day trade for the pattern day trader rule. So, you know, if people, a lot of people are not patient enough, as you've described, to swing trade. They want to day trade. So that's why I start telling people, you know, spot Forex for the very same reasons you did. I tell people risk a cup of coffee a day, $5 a day. At least you've got a little bit of skin in the game, you know. Then when you're doing good with that, whether it's a $500 account or whatever it is, then after a long consistent period, you can look at either trading more on Forex or you can go to futures. And I swear that I would say that probably 90-95% of people that I tell that to flat out just discard that to the wayside within seconds. They don't even consider it as a viable option. And my experience has been that's because they've already lost a substantial amount of money with futures, and they feel like they cannot earn that money back whenever they're using less leverage. What's your feeling? Why do you recommend that?
Well, first, all the statements you made are 100% correct. And a lot of this is now coming down to the education industry that's around us. If you look at all the advertisements out there, there's a lot of people now advertising, and this is across the globe, okay? This is not just in one area, one region of the world. A lot of people are saying make $100 a day or $300 a day. And when you see these advertisements, all of them are encouraging you to sit there, trade gold futures, in the S&P 500 futures, or even the worst one, the Russell. Okay, and all these education companies now are starting to teach you day trading on future products. So and you guys may have heard this earlier, so let me tell you this. Future products, I don't know anyone that's a consistent, successful trader for a long time just trading future products. I'll tell you that right now, okay? And I'll explain why in a minute, okay? Future products are created for hedging. Most institutions, believe it or not, when they trade future products, when they buy the E-mini S&P 500 futures or gold or something like that, they're not doing it for speculative plays at all. They're doing it for hedging. If they are doing it for speculative trades, they're not doing it for one day. They're going to be sitting there holding those positions for 3 months, 6 months, or 1 year, such as gold. And they may be sitting there like holding gold to hedge the rest of their portfolio. Okay?
Right.
So you guys got to understand, the big money are not day trading futures like what you guys think.
Right.
The high frequency traders are, right? And they're doing that especially on the lower time frames. And really, you're sitting there learning how to sit there and scalp and swing trade on the lower time frames, and now you're competing with these high frequency traders. And guess what? You're not going to win because of emotions, greed, impatience, and everything.
I guess
and the other thing you guys got to...
Sorry, I tried to answer the question as to what made me transition. 15 years ago, I was swing trading equities and then day trading equities. And about 5 years ago, I started day trading futures. And I've tried to remember that exact moment in time as to why I decided, futures. And I really don't have a good explanation. I really don't. And I think that it was a poor decision because I think that like you said, outright directional trading is extremely difficult. And then doing it in the futures market, it's just that much more difficult to do, in my opinion. And yes, I know there are people on the forum that do this, and that's fantastic, but the majority of people don't. They're not successful. And, I found myself over the last few years of even scaling back my futures positions, or at least not day trading them very often. I'm more and more going to bigger and bigger time frames, going back to the swing trading ETFs and even swing trading futures instead of, day-to-day trades. So I don't want to sidetrack too much further than we already have, but I just want to point out that it's perfectly okay to start with spot Forex for a little bit of money, $500. And I don't care that maybe, it's not quite as, what's what I'm looking for? It's not quite as efficient as the futures market, and you're going to give up some extra in slippage. That's fine. If you don't have a strategy that can overcome that little bit extra in slippage, then, you're not going to be successful with futures anyway. So protect your account. Live to fight another day.
And just one comment, Mike. You mentioned that you regret starting down a futures path. I wouldn't regret it at all because trading is all about experience. Believe it or not, you start off rough and you learned, and it actually makes you a better trader today. So it's actually a good thing that you went for the bad stuff at the very beginning and you came out learning from it. It actually makes you a better trader today. Wouldn't you rather make mistakes when you're younger than older?
Yeah.
That's the way I look at it.
Yeah, you're right.
But, I'll tell you this now. I start every one of my students off in currencies. I don't care if they're wanting to trade stocks. I don't care if they're wanting to trade futures. I start every student off in currencies in my program. And the number one reason why, one, I don't want them trading stocks because they're emotionally tied to stocks like Apple, Home Depot, everyday normal items and stuff like that. Two, futures. Well, how are you going to sit there and tell someone to be patient and wait for a chart setup when they're only trading 2 products on a future products? They're not going to be patient. If they're sitting there trying to make money every week or every month, and they got to be patient and wait for a chart setup to come on 2 future products, it's never going to work. You have to be diversified. And how far can you be diversified as far as future products are concerned? You can't really go diversify and start trading lean hogs and feeder cattle, corn and all that, because now you're going to have a huge bank account. Not only that, now you're also going to be subject to liquidity issues with some of the future products, margins, gaps overnight, and stuff like that. So it's dangerous to sit there and just trade futures by itself. What we encourage our students to do is learn how to read a chart and learn how to successfully trade with currency market. Why? It's the best trending market out there. It's 24/7, so it could fit into various people's schedules. And a lot of people are scared of currency markets, Mike. The reason why is they're thinking they have to sit there, wake up at London hours or listen to news and this and that. Well, guess what? The companies that are teaching people how to sit there and listen to news and all that, they're actually blowing out their accounts. That's not how you really trade currency markets. Okay? Do you really think the central banks are sitting there day trading day in and day out, or the interbanks? No. The big money is holding positions for 2 to 3 months, and that's actually causing the trends, the long-term trends in the currency market. So it's a lot safer market, believe it or not, to learn from and to learn good habits. And this is something we're going to highlight. When you start trading, you have to keep on doing things that keep on building your confidence in yourself and trading. You have to keep on building yourself over and over and over. If you sit there and start trading futures, you're never going to build yourself. You're never going to build yourself up to becoming confident as a trader, or you're never going to believe in your technical system or fundamental system, because you're going to go swinging up and down to a point you never gain momentum. So you got to make sure that you continuously build yourself. No matter what you do, you have to build yourself as a human being, as a trader, and also build confidence in your system. If you don't do that, you're going to fail. Okay? Now, I see questions here. I'm going to defer them for a little later, okay? Because some of them are related with Forex, and I kind of want to finish up going for the psychological stuff instead of going into the details of currencies and stuff. Remember, this is not about Forex webinar, and it's more towards the psychology of trading. And the last bullet point here is confidence. We talked about this. Confidence is a key. Let me tell you this. If you're a follower, you will never be successful in trading. You have to be a leader. Leaders are confident in every aspect they do. They don't hesitate at all. You have to be a confident leader in order for you to beat these markets. If you're not a leader and you're a follower, go find something else to do. I'm telling you that right now. Because either you learn how to lead or you're going to fail. I'll tell you that right now. Only confident people will be the ones that survive in this business, because you cannot have hesitation. There's no in-between in trading. Either it's yes or no. Are you going to put an order out there? Yes or no? Yeah, maybe. There's none of that. By the time you're thinking about it, it's over. Okay? What do I mean by leader? That means basically you don't have doubts at all in anything you're doing. You know what your trading plan is, and your goal is to execute it. And you're not going to sit there and second-guess yourself. Okay? Now, let's talk about the resolutions. So over here on this slide here, okay? And believe it or not, in my classes, we turn everyone into a leader. If they can't turn into a leader after they're done with my class, they're torn apart. Okay? Now, here's the answers. So the first thing, to your left is where all the issues that we outlined are. To the right is basically how you resolve them. And these are resolutions in my eyes, okay? Different people are going to give you ideas of how to resolve each one of them. This is how I'm telling you I resolved it within myself, and this is the same thing I'm teaching to my students, okay? Now, this is the way we're doing it. Doesn't mean that everyone's going to be doing it the same way. Does everyone understand that? This is subjective on how to resolve these issues, okay? So does this mean this is the complete answer? No. You may have a better way that works for you. Does that mean that you come my way and not do it your way? No. You do what you think is correct, okay? The way we deal with impatience is diversify. Why are you impatient? Why are you only trading one instrument? If you think about it, you have your trading plan that tells you to look for a setup. You become impatient when that setup doesn't come, and it doesn't come for a long time, right? That's why you become impatient. But if you diversify and you're looking at multiple asset classes, from stocks to futures to currencies, right? Now you're diverse. You're not going to have time to sit there and become impatient, because you're continuously going to be looking at charts and looking for setups that are there. When you find them, you're going to trade them. You become impatient because you're not generating income, because you're looking at one or two products, okay? Now I'm telling you to diversify. Diversification is key. Not a lot of people talk about it, but this is number one aspect, I'll tell you this now, that actually resolved a lot of my psychological stuff. I trade everything out there, okay? I trade futures, I trade stocks, I trade currencies. Believe it or not, I even trade global markets out there. We trade everything from Brazil stocks, UK stocks, Canadian stocks, Singapore, Malaysia, everything. You have to be diversified, especially now. Why now? 10 years ago, computers weren't prominent. Now they are. Everyone is trading at the same level. This is a global economy. It's not a U.S. stock market. It's global. Everyone understand that? Okay? Second, revenge trade. Well, if you miss a trade, move on. Time is your friend. It's not an enemy. There's always going to be some opportunities in the market. All you have to do is find them. If you diversified, then you're not going to have a problem with revenge trade either, because you're going to be looking for some opportunities. Stop thinking about what you've missed, because there's more opportunities come. If you're thinking about what you're missing, believe it or not, there's another opportunity that's going to come while you're thinking about the past. So stop thinking about the past and do what you're responsible in your business, which is to go and find the opportunities and make money. That's your responsibility in your business, to go find the opportunities and put the trades on. That's your sole responsibility in your business, and that's what you have to do. Okay? Emotional. Do not trade if you're emotional. Trading is all about probabilities. Win versus losing does not matter. Risk to reward, that matters. I'm so tired of retail people telling me their win versus loss ratio. Your win versus loss ratio means nothing. Guess what? I teach my students how to be only 30% correct with a successful system and still be profitable. 30% correct.
Amen.
Right? Think of it this way, and I challenge everyone and take these numbers down. If I have a system that's only 30% correct, but I enter with a reward-risk ratio of risking $1 to make 3, at the end of the month, am I going to be profitable? You take 10 trades, okay, and I risk $25 to make $75, and I'm only correct 3 times, and the other 7 trades, I go to my max reward. You tell me if I'm profitable at the end of the day or not. And that's with a system I'm only 30% correct. Your reward risk is what matters. I could tell you this now. You take a 5-year track record where you're making money, right? And you go to an institution and you submit it. They're not going to look at your win-loss versus loss ratio. They don't care if you're 95% correct. They're going to look at your reward risk. Even if you haven't lost for 5 years in a row, if your reward risk is not good, they're going to say, sorry, no, we're not looking at you anymore to manage money. Everyone clear with that? And I'm telling you that because we did this. We didn't care what we were doing on the institutional side about the winning versus losing. Retail people look at that. We don't. Institutions want to keep risk low.
I'm always surprised by again, going back to those trading signal rooms, and people get all excited because they have a 95% win rate, and I'm like, okay, that doesn't mean anything, you know. Manesh, do you use expectancy, R multiples, MAE, MFE? You know, what do you analyze personally? Like I've seen some firms that look at how long duration that you hold winners versus losers. What kind of stuff are you looking at?
Really, Mike? None.
Okay.
We've simplified trading to a point where what happens with us is that we put orders out there and they may not fill for a week or two because we're waiting for the market to come to our conditions, right? We don't take any trades unless we know for a fact we're going to make a minimum of 3-to-1 reward risk ratio. I'm saying minimum. Okay, so we know where our minimum reward is going to be.
Right.
And we do all our calculations based on that, and that's it.
Okay.
And so we're just sitting there trading probabilities, and that's it.
Okay. So that would, I mean, just the basis that it's always a minimum of 3-to-1, then it's going to go, that automatically says a lot about the MAE and the MFE, and automatically says a lot about how long you hold winners versus how long you hold losers. And what I found is that a lot of people have all those things inversed. You know, they hold losers far longer than they hold winners. It's just like
the reason why, Mike, and the reason why we don't get into all that statistical stuff, Mike, retail traders don't care about that. And when I start talking about that stuff, it goes way over their head to a point they're like, I'm lunatic. All they care about is making money. So what we figured out is dumb it down now to a point we give them enough information to be successful. So what happens is when we get to the reward risk of 3-to-1, we go into what we call preserve mode. We don't exit the trade.
Right.
What we do is we tighten up our stop, and if the trend keeps on going, we keep on going to a point that reward risk ratio will go from more than 3-to-1, can go up to 10-to-1 sometimes.
And just to provide
our winners to rule.
Right. And just to provide a little bit of context, you're talking, I mean, you said you have orders out there that are sitting out there for quite some time. So you're not holding a position for 30 seconds. Your stop is not 10 ticks on the ES. You know, even if it is 3-to-1, you're doing bigger positions. Because I don't want to give anybody the false idea that it may work that you can simply have a 4-tick stop and a 12-tick target in the ES. Because I don't think that it's quite that simple of just having the math on your side. Whenever you have numbers, quite so small, it's just noise. It's impossible to time things that precisely.
Yeah, and you're correct, and thank you for making that correction. Our technical system is built to a point, it tells us where our minimum reward is going to be, okay, with high probability. So that's what we're basing it on, okay? So when we're taking these trades on, we're not saying it's going to go to 12 for sure. We're saying it's minimum going to sit there and possibly go to there. If our technical system doesn't say it's going to go there at all, we're not putting on that trade at all.
Right. Okay.
Okay. And remember, I tell you 30%, right? And the reason why we teach people how to be 30%, we want everyone to think worst case scenario. You always want to plan for the worst case scenario, and why?
Right.
If you plan for the worst case scenario, do you think you're going to get surprised easily?
Right.
No. But when you're surprised, what happens? Emotion comes into play, right?
And John has a good point, so I want to ask this question because it plays into this. He says a system that wins only 30% of the time can suffer a long string of losers. How is that likely to, or isn't that likely to sap your confidence? And we all know that people prefer to be right. So how does the human instinct of wanting to be right play in with the 30% win ratio?
Well, we teach our students from the get-go, losing is not bad. You should actually smile when you lose, because guess what? You got out for a minimum loss.
It can still be
the number one thing, John. We have to teach our students straight from the get-go is losing is a happy thing, not a negative thing. And
you can have a good trade that loses.
Yep.
People don't seem to get that, but you can have a good trade that loses, and you can have even worse. You can have a bad trade that wins.
Yeah, and if you think about it, right? When I'm wrong, right? I want to cut my losses off right away. I'm humble enough to accept the fact that I'm going to be wrong the majority of the time, right? I'm humble enough to accept it. I have no problem with it. I'm not trying to show off to anyone. I'm not trying to go to someone and say, hey, guess what, buddy? I'm 98% correct. How about you? I'm not doing this to show off to anyone. I'm doing this for me, right? So I don't need to show off to anyone at all. I'm humble enough to sit there and take that scenario and say, when I'm wrong, I'm wrong. I'm going to cut my losses off short when I'm wrong. And that's the whole idea. That's how you're going to become a successful trader. When you win big, and you let those winners take care of all your losses. And that's what we're going to talk about in a minute when we talk about business. You got to create a budget for yourself. And if you don't create a budget for your business, you're going to fail. And that's what I'm going to talk about in just a minute. How can I change my mindset to believe being wrong is a good thing? Well, I don't know you, so it's kind of hard because I'm just looking at text, okay? You got to understand, when I do my classes, I'm looking at people live, okay? We don't do our classes over the webinar. I'm looking at each person's eyes, I'm looking at their body language, everything. Each person's different on how they conquer it, right? But I'm going to show you some techniques in a minute of things you could do to kind of help you along, okay? Greed. I think greed. This is the number one problem I have. And this is one reason why you as retail traders are not successful. You don't go round trip. Round trip means that basically you're positive in a trade at one point, and then you sat there and lost all your profits and went negative. How many guys go round trip? I would bet majority of the people on this call go round trip. I would bet 95% of the traders on here, they're not successful. Believe it or not, you're always profitable in the trade, but somehow you lose it. I want you to go back and I want you to go analyze all the trades that you've lost, right? Find out how profitable you were, and if you just sat there and take little profits of each of those losing trades, how much would you be making today? That's a challenge for everyone out there. And you'll realize, because if you agreed wanting to hit a home run, you're not profitable. This is like playing baseball. Get to first base. Stop trying to hit home runs. Occasionally home runs will come. You take them as bonus round. But your goal is to get to first base. You guys understand that? And play the game. Okay?
And Manesh, can I ask about scaling
you have
out?
To be,
Do you scale? And does that help you to reach that objective?
No, what we do, scaling out, we really don't even teach our students to scale in and scale out until they get to what we call advanced mode. Okay? So I'm going to talk about non-advanced mode because we got a lot of non-consistent traders on the call. Okay? So we have a thing called preserve mode. So when price gets there, that's when you start tightening up your stop drastically to a point you never get back the profits. Okay? So for advanced traders, at that point, Mike, they would sit there and scale out 50 to 75% of their positions at the preserve mode. Does that answer your question?
Yes. I don't want to go too far off topic, so we'll have to do another webinar at some point that focuses on that.
Okay. Yeah, preserve mode is a concept that I came up with, and the whole reason why we came up was to control greed and stop students from going round trip. And actually it helps students drastically to a point they become profitable consistently and builds their confidence. Okay? Thomas, we always look for a minimum 3-to-1 reward-risk ratio. Minimum. Okay? Anything below that? No, we're not doing it. Because statistically, you can't win that way. Okay? Confidence, you have to be confident in your system in order to make sure your system is back-tested with historical data. What's the purpose of back-testing? Not only to prove your system works, and it's great, but what? To build your confidence in the system so you could execute it day in and day out, isn't it? If you're not confident with what you're doing, you're going to lose. You don't have a chance to second guess yourself when you're looking at these charts. You better be confident in yourself as a trader and also the system. If you don't, you will fail, and I guarantee you will. Okay? Now, what is trading? And this is, I highlighted this to Mike a minute ago. What is trading all about? Let's get to the foundation. Why are we assuming no one on this call is profitable? Well, Mike, I'm just talking in that perspective. If you're profitable, that's great. Okay, but I'm just talking like assuming, I'm thinking worst case scenario and trying to help those people move forward. And then, you know, you can sit there and go through all that stuff. Okay? Trading is all about experience. The experience comes from learning from your mistakes. Are mistakes healthy? Yes. Are they a bad thing? No. If you're learning from your mistakes, they're not a bad thing. But if you're not learning from your mistakes, then it is a bad thing. You guys understand that? Okay? And Rick, I am serious about the 3-to-1 reward-risk ratio. Okay? So, I'm not joking. I'm serious. Okay? Now, the key thing you have to accept right now, you will make mistakes. What you do with them is what matters. You guys understand that? Yes? Okay? Now, trading business. Okay. Every one of you guys have got to treat this as a business. If you take a business, starting a restaurant, starting a food chain, starting a food truck, whatever business you want to start, if you take the steps of whatever you do in starting a business and incorporate those same things in the trading world and create your own trading business, believe it or not, you'll be successful straight out of the gate. Okay? Everyone understand that? Okay? So, background. In order for you to be a consistent trader, again, you have to make sure you are not the enemy. Okay? Recognize your strengths and weaknesses. Make sure you work towards your strengths and avoid your weaknesses. Can everyone do that? First thing is to recognize them and then work around them. The first, what you have to do is start your own trading business. That means your trading plan will be tailored towards your strengths and avoid your weaknesses. Everyone see that? So just like in the business world, you create a business plan, you have to create a trading plan. In your trading plan, it's going to sit there and write your objectives. Why are you trading? What's your purpose of trading? How are you going to trade? What are you going to do to avoid your weaknesses? Everything needs to be outlined in there. So the very first thing you guys need to do, and this is shocking to see this, and I always ask people this, and it's amazing to see this. The very first thing you need to do is, why are you trading? You should know exactly why you're trading. And on a piece of paper, you should be written that down. So on a piece of paper, everyone should write down, what is your dream? Why are you trading? If you're writing to become a millionaire, that's not a dream. That's not objective, and you will fail. What is your purpose of trading? If you can't see that objective, then you're going to definitely fail. Everyone see that? Believe it or not, majority of people, when I ask this question, they write down, I want to be a millionaire. I want to sit there and do something similar to winning the lottery. This is not about money. Money is an object to get to your dreams. What is your dreams? Why are you doing this? Is this for your family? Do you want to retire? Do you want to get away from a boss? What is your dream?
Hey, Manesh, I'd like to ask you real quick. I find that a lot of people, it goes to what you just said, that a lot of people come into trading with completely poor or bad or wrong expectations. You know, their expectations are just not even close to reality. And a couple of examples would be that they think they can take a $5,000 account and they can earn, you know, $3,000 a month return. Or another example would be that they just lost their job. They got laid off. And, you know, now that they're home, they're going to go ahead and become a trader full time. You know, how do you feel about those things when people approach you with those types of history or expectations?
One, if someone comes to me and they don't have a job right now and they're learning how to trade, and this is going to be their first thing straight from the get-go, they're in trouble. Let's face the facts. It's going to take someone, a brand new trader, a year to 2 years to get going and start getting consistent profits. And I'm giving you worst case scenario. The reason why is I don't know how everyone learns. Everyone learns at a different pace. There may be other things in their personal life that's going on too, especially if they're not working. So I'm thinking worst case scenario that it's going to take them 1 to 2 years to a point trading is going to start giving them a residual income, even a little amount. Okay, so they're kind of doomed to begin with because they're going to sit there and trade with emotion straight from the get-go. Okay, so those people, I highly encourage them to sit there and start looking for another job or something while they learn how to trade. Okay, if they're an experienced day trader and still not profitable, then it's easier to sit there and start showing them how to start slowly making profits. But they got to learn how to make profits with one contract consistently for 6 months. If you can't make money with one contract for 6 months consistently, there's no way you're going to be able to create a residual income.
Right, I agree. Okay. And how do you feel about setting expectations? You know, do you talk about that at all?
I do. I tell them straight from the get-go. If someone wants to retire from their job, I tell them they can't retire from their job unless they got 2 years of salary in the bank, straight out from the get-go. Right? If they're coming to me and they don't have a job, I'm telling them they're setting themselves up to fail right then and there. Listen, one thing, Mike, you'll learn about me, I don't massage my students. I don't tell them what they want to hear. I tell them reality. And reality is reality. If they accept it, they accept it. If they don't accept it, then they'll go down their own path and they'll come full circle.
If someone,
but, you know,
someone opens a $5,000 futures account and they want to make $500 a day, what do you tell them?
No experience at all?
You know, they traded Apple a few times in the past. I don't know.
So basically that means no experience. Yeah. They're hallucinating. That's what I'm going to tell them.
Yeah, I mean,
I'm going to tell them they're hallucinating.
And how big does that number need to get? I mean, or is there even a number? Let's say they deposit $50,000 and they want to make $500 a day. Because I've seen that too. I've seen, you know, one thing I've learned about the forum is that everybody has a different idea of money. It's all relative, right? So, you know, to one person, $5,000 is a lot, and to another person, $5,000 is absolutely nothing. So some people think that they can just throw more money at the problem. Does your answer change?
No, it doesn't. And honestly, we don't care how much money people are putting in, because even if you have $2 million or $1 million or $500 to your name, all our students always start with trading one contract in currencies all the time. And for 3 months continuously, they're only allowed to trade with one contract. And then they slowly build up based on the number of money that they have. So whether you have $500 or $2 million, everyone's going to trade with one mini lot straight from the get-go. And they're going to continuously do that. Now, if you have more, then later on, once you show consistent profits with one contract, you start building upon that with time. Okay? But, you know, if people come in with illusion that they're going to make money straight from the shop, I'm going to tell them they're not. I mean, there's no way. You can't sit there and replace 18, 20 years of chart experience and do it in 2 months.
Right.
Right?
And since
you
we're talking
take all
about
the experience and put it in and do it in 2 months.
Right. And
it
since
takes
we're
time.
since we're talking about psychology, or you know, if it wasn't for me interrupting, then we would be. Let me back up and say, why is it that everybody always focuses on how much they can make? I see spreadsheets, I see posts of, you know, compounding all their money, and they're going to be trading 1,000 contracts and ruling the world here by the end of the year. And I never see anybody talk about how much they can lose.
Yeah, winning does not matter. The losing trades are what matters. At the end of the day, you should not be even looking at your winning trades at all. You should be analyzing your losing trades. If you see a consistent pattern where you're losing day in and day out with the same chart pattern or same method, then you got an issue with your trading plan. Markets have changed to a point your past events that you back tested are no longer that great going forward. Right? So your losing trades are what matters at the end of the day. You know, and one thing, Mike, you could see it right now from the questions. Everyone's hung up right now on the 3-to-1 reward risk ratio. You guys see that? A lot of people are asking me about 3-to-1, 3-to-1. You guys are missing the point. This is about psychology, not about how you get 3-to-1 reward risk ratio. You guys are still stuck on money. We could talk about the 3-to-1 reward risk ratio, and I could show it to you and how you could do it, but it's not going to be on this call. This is about psychology of trading. This call is to make sure your mindset is all set correctly. This is not a call where technically I'm showing you how to get a 3-to-1 reward risk ratio. Everyone understand that?
Yeah, that's just another shortcut.
So
everybody wants the shortcut.
Questions. I'm going to table them, and I'm not going to answer them. Yeah. This is not listen, guys. One thing you'll learn about me: I'm straight with the ways I do it. I'm not going to alter just for you. So your 3-to-1 reward risk ratio questions, I'm not going to answer because this is psychology of trading. If you want, we could do that a little later, but not on this one. Okay, and I could even show you a website where you could go and look at our trades where they're 3-to-1 or more, and you could continue to see every trade every week for every global market because we blog everything. So that will address your 3-to-1, okay? So there's no need for me to talk about it when you can look at live charts and analyze them yourself. So let's not bring up any more questions about the 3-to-1 reward risk ratio. How about writing down your dreams on a piece of paper and seeing if it's there? What are you doing this for? Mike, can I ask you, why are you trading?
Sure. I have a 3-hour answer to this called an afternoon with Big Mike. It's a webinar that I did a couple of years ago on the forum. It took me about 3 hours to answer the question. But, yeah, it certainly wasn't about making $1 million. It was more of, I hesitate to say it again because I kind of feel bad, but I'm not a real people person. I like being in complete control of everything that I do. I like having all the burden, all the responsibility, everything fall on me. You know, I've owned plenty of my own businesses in the past, and it's just not the same because even with small businesses, I still had employees. I still had customers, you know, and that's great, but trading is completely different, and it is the thing that I want to do. It's the only thing that I'm going to do. And even I've said even when I retire, which I feel like I'm getting closer and closer, I hope to retire very soon. To me, when I use the word retire, it doesn't mean that I'm going to give up trading. It just means that I won't have to rely on my day-to-day trades in order to pay bills, right? It means that I always want to trade. I can't imagine me not trading. It's just part of who I am. It has been for the longest time, but only for the last 5 years or so have I done trading full-time. So I hope that answers your question. And Manesh, let me throw it back
No,
to you. Why do you trade?
okay. Well, before I answer that, let me stress something. Did everyone listen to his response, the Big Mike's response? Notice he says, "This is the only thing I'm going to do." Is there a second option in Mike's mind? No. Is that a sign of a leader or a follower? Do you think, even if Mike gets a couple of losing trades in a row, do you think he's going to get frustrated and give up? Do you think there's another option for Mike at all besides trading? No, there isn't. This is it. Long time ago, that this is what he wants to do, and this is going to be his vehicle for success for the rest of his life. No matter what happens, he's going to learn from it and make it successful. How many of you guys, when it gets bad, how many of you guys quit? How many of you guys came into the notion of trading and say, no matter what happens or how ugly it gets, I'm still going to trade. I'm going to make this work. If you don't go in with that attitude, with a leader attitude, you will fail. I'll tell you this now, okay? I've blown up my accounts 3 times. I lost over $15 million in this market. Do you really think that if I was a follower that I'd be here sitting there talking today? No. I made up my mind this was going to be my vehicle. Because at 14 years old, I saw someone trade, and I saw what it gave him, the luxury of life, not worrying about money at all. He was completely independent of money, and I saw that at the age of 14. At that point, I made up my mind, this is what I'm going to be. Even though I had to do engineering just to get money and get out and start making money because I grew up on the streets, that was a vehicle for me to make money to put into trading and learn. But there was no turning back for me. There is no turning back, and there never will be. Even as an engineer, I knew this is what my life would end in to be. How many of you guys are going in with that attitude? Or how many guys are going in it halfway? Would you do that in your job today? When you go to school and you learn, did you sit there and graduate with an engineering or doctorate degree and say, well, you know what, I'll do it for 3 or 4 years and then just give up and then I'll just be a full-time buck?
Yep, I agree completely. You cannot make it about money.
Yeah.
You know, when I quit my job, I already had money. Money wasn't the issue. I didn't start trading because I wanted more money. I didn't like my job, you know, and it took me a long time to actually realize it, because for a long time I thought that my job was the best job you could possibly imagine. I got paid big bucks. It was technical. I thought that I was happy, but you know, I finally figured out that I actually wasn't happy. I was almost miserable instead. And I could see things change almost overnight when I made up my mind. Trading is it. And it was a long, hard journey. Like I said, I talked for 3 hours about it, but it never was about money, never. And I do agree with what you said. It's a very good point, that if someone makes it about money, they equate trading with money. I just don't, it's not going to work, you know? You got to have the passion for the actual trade itself.
Yep. And my dream, Mike, is basically, I grew up in the corporate world straight out of college. People backstabbing, people being ugly, and I was always told when I graduated from college that you better start learning how to do something independent. Reason why is when you get to 40, 45, and you're making a high income salary, and due to your age, companies are going to let you go. You're going to be replaced. So your time's ticking. So when things are good, you better start ready and getting prepared for the worst. That's what my father always told me, and that's what I prepared to do. And I wanted to become independent of people where I don't have the concept of boss anymore and control my own destiny. Right? If I want to go on a trip, I could go on a trip. If I want to put my kids through private school, I don't have to worry about the money issue. I want to do what I want to do, and I'm not going to allow money to control my life. And that's why I started trading, because it's the only way that I could control my own destiny in my own hands was through this, because you have no employees, just like you said. And now, for me, trading is all about my kids. I have a 1-year-old and a 4-year-old boy, and trading is all about them now, because when they get to a certain age, I'm going to teach them how to trade. and I'm going to leave a legacy to them so they know how to sit there and churn money to a point they could sit there and fulfill their dreams. If they want to be a teacher, they're going to go and become a teacher and not worry about how to pay bills. They're going to follow their dreams without ever worrying about money. And that's what I wanted to leave my kids. Okay? And you guys want to see a picture of my kids, you can see it on Facebook. No, Adrian, I'm sorry. I tell my students I'm not looking to adopt any kids, okay? Sorry. Okay. Trading plan. Now, this is a glimpse of what your trading plan should be. Background. What is your dream? What type of trading will you do? Are you going to be a trend trader, counter trend, gap, use what? What type of order entries are you going to do? Breakout or pullbacks? When will you trade? You know, some people sit there and say, I want to trade at 6 o'clock in the morning. Some people say, I want to trade when I come home. When are your times? You want to define that. Why? Because this is your business. If you're not there at your business working, is the business going to run by itself? No. So why don't you define it and say, you know what, every day or every other day I'm going to spend a half an hour from 7 to 7:30 in the evening looking at charts. Define it and put it in. Okay? Because if you don't put that, then you're going to go nilly-willy to a point you're never going to do research and you're randomly going to do it. And it's never going to work. When and how will I do my research? What am I going to research? If I'm doing stocks, am I going to research all the ETFs? If I'm doing currencies, which currency pairs am I going to look at? If I'm doing futures, which future products am I looking at? What time frames am I looking at? What am I going to look for? Blah, 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 blah. What instruments will you trade? What's your maximum risk per trade? What's the maximum asset allocation? This is a little more towards the money management, but this covers your entire portfolio. Then your daily work habits. What will I do before I look at a chart? Believe it or not, most people don't think of it. If you don't prepare your mind before you look at a chart, you instantly are setting yourself up to fail. I didn't believe it before until someone told me it, and I tried it, and guess what? I go for a ritual before I even look at a chart, and it prepares my mind to be successful. And I'm going to show you what I do. Okay? How long do I look at a chart? I have a 3-second rule. I will never look at a chart more than 3 seconds. Because after that, I'll start second-guessing myself, and my first instinct get argued with. Okay? Trade log. How many of you guys have a trade log? I will tell, I bet majority of the people on this call don't even have a trade log. If I tell you to submit your trade log to me, can you do it today? What's in your trade log? Do you take snapshots of your charts before you enter and after you let exits too? What's in it?
Hey, Manesh, that reminded me of one thing I just have to say. Before I, went trading full time, I can recall with perfect clarity that I thought psychology was mumbo jumbo BS. I'm just talking about general life, just talking about going to a psychologist to share your feelings and try to find out why you're acting a certain way. Just general things, non-trading. I would never, ever, ever buy into any of that. Now, today, almost all the books that I read are on psychology. They don't even have to be about trading. That is where all my focus is learning about human behavior, crowd psychology, patterns, and that's where all my emphasis and all my work is. And I wanted to share that. Last thing about the trading journals, by the way, I just want to say that I am proud of all the people that do journal on the forum. It's still a small percentage overall, but at least we do probably have a couple hundred journals at any given time that are being updated.
Let me tell you how serious I am about trading journals, Mike. After our class, students for 2 months continuously have to submit their trading journals every Sunday night. The moment they don't submit the trading journals, I fine them $100 for every time they don't. And in those trading journals, there's over 15 columns of data they have to fill out. Not only that, they have to give me a snapshot of the chart when they put the trade out there, when it entered, and also when it exited. And that's all submitted in an Excel sheet, and they have to do that every week, continuously for 2 months. If they don't do it for 2 months, they're kicked out of the program. That's how serious we are with trade logs. Because without a trade log, they're never going to learn.
Yeah,
not a question.
Right.
It's not objective. It's a fact that most people do not realize or do not understand it at all.
I always ask people to go back and look at the last 2 weeks of their journal at the end of every week, so that you can try to see, are you making some forward progress, or are you just spinning your wheels going in circles? And if you don't have a journal, how are you going to know that? If you boil it down to simple numbers, simple entry point, exit point with no reasons for entry, or, if you're not, you get out what you put in. So how are you ever going to learn from a journal, learn about your personal behavior, your personal patterns, whenever you thought a trade was bad and it actually turned out to be good, or you just knew this trade was going to be a home run and it failed miserably? Those are the things you've got to capitalize on and learn from, right?
Yep. Berta made a comment, that's a good way for me to make profits. No, it's not. You know why? I donate every fine away. Okay? We donate all our fines away to students. The whole idea of finding students is to basically hurt them in their pockets to a point they remember, and they'll start doing it. Wouldn't you rather lose $100 than lose $10,000 in the market? Or 20, or 30, or 40, or 50? What is $1 compared to losing $10,000? Think of it that way. Okay? Entries. When will I enter? What will be my stop? What will be my target? When will I go to preserve mode to protect my profits? When do I add new positions? This is for new advanced traders. Okay? Money management. When will I preserve my profits? When will I add new positions? When I exit some positions at a certain point, how many am I losing? So these are just some ideas of money management, but there's many, many more. And this is a basic template for a trading plan. This doesn't mean this is everything. You guys understand that? Yes? Okay. Now, this is my daily work habits. Now, some of you guys are going to think I'm lunatic, but guess what? It works. I studied neurolinguistic programming, and I firmly believe that you could sit there and talk the future into the current present. If you don't know what I mean by that, listen. So, listen to this. Before I look at any charts, I close my eyes and I read out the following statement from Van Fart, from the author of Trade Your Ways to Financial Freedom. This is before I look at any charts every day. I read this out loud to myself, and I make sure I understand this before I look at any charts. Once you're in a position in the market's going to do whatever it wants to do, and you no longer have control over anything except your exits. So this is a statement, a ritual I do every day before I look at a chart. Why? I want to make sure I don't defeat myself. I want to make sure that I never get a chip on my shoulder to a point I feel like I can control the markets. Everyone understand that? Okay? Now, this is something that a lot of people do not believe in. And I thoroughly believe this, and I really encourage you to do this. Write a statement, and every night before you go to sleep, read it out. Why? When you read this statement out before you go to sleep, guess what? You're programming your subconscious mind. And believe it or not, if you program your subconscious mind, when you wake up in the morning, it automatically programs your conscious mind. Okay? So this is what I read every night before I go to sleep. I'm a successful, confident trader that will wait for opportunities to come to me patiently. Okay? I let price action determine what to do, and I'm humble to the markets. I learn from my mistakes and obtain consistent profits at every opportunity. My trading business is good, and I have a lot of fun. My dream is one step away. Now, how can you get crazy? Guess what? This is printed out, laminated, stuck to my ceiling to a point I just read it out. My wife thinks I'm crazy. Yes. But do I look like I care? No, this is my business, not hers. This is a ritual I do. So in the morning, I'm setting myself up to be successful. You guys understand that? It's a ritual, and believe it or not, I'm telling you, do this. and watch what happens in the morning. You'll wake up, believe it or not, you'll wake up like you feel successful. Because you're not, believe it or not, this is dealing with neurolinguistic programming, and you're unprogramming your subconscious mind at night. Okay? Now, you don't have to use what I'm saying, phrase it into your own words. Okay? Now, also, I have a picture of my dream above my computer monitor. My dream, my kids. What do you think I have above my computer monitor? The kids. Also, I have a picture of bikes, and it says determination. Also, I have a picture of some ice waterfalls, which says imagination. So those are my dreams. Everyone understand? So am I sitting there doing positive reinforcement to myself every day? Yes, I am. Am I taking a break in doing this? No. Does your business ever stop? No. If you stop, what happens to your business? Kiss it goodbye. Now, this is a chart I use in my class in my slides. Okay? So this is based on our strategies and our systems. And this is a high overview. What do you need to be a real trader? You need to create simple strategies. Why? It builds confidence in you, in the system. Everyone understand? Remember, every human being has a limited capacity to remember. Okay? If you try to fill up that memory capacity with too much information, you think you're going to be successful or fail? You're going to fail. Trading needs to become a habit, like you going to a bathroom. The only way it's going to become a habit is if the strategies are simple to a point you know them inside and out. So you have to make sure your strategies are simple. If you got 20,000 rules, it's not going to work. If you got 20 rules to your strategy, it's not going to work. Simplify, because the goal is to play the probabilities. Okay? Our money management is there to help us control our emotions. If we know we're going in with a 3-to-1 reward-risk ratio, and we know that we're going to have a lot of losing trades compared to winning trades, it sets expectations straight from the get-go to a point I'm not going to be emotional when I lose. Am I correct? Yes. And guess what? In order to believe that I could do the 3-to-1 reward-risk ratio, and also in order to believe I'm okay with doing 30% being correct, you got to backtest. If you backtest and you continuously keep on getting 3-to-1 reward-risk ratio minimum with only being correct 30% of the time, don't you think that's going to build confidence in you, in the system? But if you can't see it in the past, you really think it's going to build confidence in you now? No. So make sure your money management's there to the point it's setting you up for there's not going to be any emotions. Is your money management ready to handle a flash crash? Is your money management ready to handle a market crazy day? Is your money market ready to handle a black swan event? If the answer is no, guess what? You're not setting yourself up to be successful. Your money management needs to be prepared for the worst case scenario, and you need to write it down. If you don't prepare for it, then an unknown event can happen, and that's emotional. Everyone understand? Yes? Next, budget. So this is something new that a lot of people don't think about, but it actually comes from starting a whole bunch of businesses. When you get your first big profitable trade, right, take that profit and put it aside for all your losing trades. That's your budget for your business at the beginning of the year. So your first beginning trade at the beginning of the year that's profitable, take those profits and put it aside and say, you know what, this is my budget for the rest of the year. This is going to be for my losing trades. When I lose, it's going to come out of my budget. What's that doing when you do that? Do you think you'll care more or care less when you lose? Care less, wouldn't you? Less. And when you care less, what are you doing? You're taking emotions out, aren't you? Believe it or not, if you do this, you'll become the most lethal trader out there, and at that point, your profits will drastically increase. Just try it and watch what's going to happen for the rest of the year. You'll go in with a carefree attitude to a point you will follow your trading plan, and you won't become emotional, even when you lose. Everyone understand that? So the first big winning trade, say it's a budget trade, and allocate it and put it aside for all your losing trades. At that point, you don't care about losing, and you're now just playing the probabilities. But believe it or not, when you do that and you go non-emotional, you're actually going to win more than you lose. Kind of ironic, isn't it? And that's it.
All right,
everyone thought there was more.
All right, Manesh. So as always, really appreciate your time today. If anybody has questions, now is the perfect time to answer. We'll see how many we can get answered before we log off.
Everyone's probably afraid to ask me questions.
Manesh, remind me, how long have you been trading?
Wow, I can't even count now. 18 years plus now.
Okay.
Remember, it was a hobby for me, right? It was a hobby, and then it turned into a full-time profession in June of 2007.
Okay, so that's actually sounds pretty similar to me. I started trading about 15 years ago, off and on, like you said, hobby, not full-time by any means. And then about 5 years ago, went full-time. So we're actually pretty similar, except you manage money, I think, and I don't.
Trust me, it's not that great as you sound. I mean, and here's the thing about managing money. If you could learn how to sit there and take $40 and turn it into $1,000, you really need to manage money.
Yeah. Never mind. I was going to say something, but I won't. It'll just get me in trouble.
And let me tell you this: but let me put it this way: when you manage money, you have too much headaches. You have to talk to clients. You have to get audited. You go through so much BS to a point it takes away from having fun. So I don't want to manage money.
I remember one of the things one of the things I listed was I don't like people. So the less I need to interface with them, the happier I am.
Yeah, and if you think about it, when you're managing money, right, you're thinking everything in terms of quarters or 4-month increments. So you got to recognize profits by 4 months, right? So let's say you're down in a trade. Well, you're going to have clients calling you up left and right. You're down. They're like, so what? It's a long-term position. They don't understand that. They don't understand your strategies. They don't understand the way you trade. So then you have to sit there for every client for hours and explaining the strategies from the get-go. And these are non-technical people.
Yep.
How would you like to do that for over 50 to 100 people every day?
Yep.
Sounds fun, doesn't it?
Yeah. Not to me. I see a question from Alexander. Is there going to be a recording of the webinar? All webinars are always recorded. We always post them in the same spot on BMT at the top of any page. Click on the webinars button. I'll post it tomorrow. I will also send a link to Manesh tomorrow so he can put it on his site or tweet about it or whatnot for the followers of his. I see a question from Barney. He's asking if you could go into more detail about the ex-military and pilots. I've always heard that C-level executives are people that have a hard time with trading, and I could relate to this because, when you're a C-level executive, you're not used to being wrong, and that just doesn't go very well with trading. So, what do you think, and how does that play into the military and pilots?
Military people I find to be a lot more better at traders. Reason why they're more disciplined. Right, and they know to take their emotions out of play, especially if they went down that correct path. Right, most military people are stringent to a point. They don't bring emotions into play, so that really helps them get successful straight from the get-go because they're not their worstest enemy. So that really helps them out. Airline pilots, I've kind of got 50-50 out of it. Some are good, some are bad. So I can't really sit there and say they're the best traders out there based on my experience with them. And we've got various types of airline pilots and students, so
but
it's mixture.
So what about big successful people, C-level, used to being right? Do they do they usually do well or not?
They'll struggle because when they lose, because it's not about being right in this business. It's about controlling your risk, and that's the thing. If they're in their successful business, if it was matter about being right and that's how they got successful, they're going to struggle. But
Right.
if it was matter of controlling their risk in their business and that's how they got successful,
Right.
then they'll do great because all they're going to do is apply their principles to trading and they'll win.
Right. Good point. David asks, how do you analyze your trading logs?
Well, David, you analyze your trading logs at the end of the month or end of the quarter based on how you evaluate yourself. And guess what? You evaluate your losing trades, not your winning trades. And you go through and you look at them and you go for each one of them and you have snapshots of them so you can see it.
Right.
So first you look to see on your losing trades if you're losing on the same chart setup. And then you look at your money management, you look at your risk to reward and all that stuff. So you start going for various details and start doing an analysis.
I always call it making a list of your strengths and weaknesses, right? So you can know how to play to one or the other, or maximize one and minimize the other. And I know that for a while, what I used to do was I would use Camtasia. I apologize for the background noise. My puppy is chewing on his bone. I would use Camtasia and a webcam, right? So Camtasia would record my chart and my DOM, and the webcam would record me. And, oh, trust me, this was an enormous, this is not, it's a lot of work to do this, but I did it for about a month, and it was just incredible, the amount of information I got out of that by watching my body language while I was in a trade that was good versus bad. And, I would see what my hand would do, move the stop or whatever, whatever it is, get out of the trade early, whatever it is, versus how my body was reacting. And I tell you, that was that was worth its weight in gold to be able to see that, well, the psychology of everything kind of unfolding in that way. So I think that,
and
I
that's
think
a great exercise to do.
Right. And I've heard other traders, I can't recall who said it, but some traders have said, videotaping yourself, back in the olden days, just a regular, camcorder, but, maybe now we can use webcams, but it's a lot of work, but I think it could be interesting for some people.
Yeah, I agree.
So E-mini Trader says, I'm sorry, I skipped one. Thomas says, what can you do to improve discipline?
When you say improve discipline, Thomas, I would start with, believe it or not, the neurolinguist, the NLP stuff, writing your goal, writing your statement at night, reading it yourself, build up yourself, right? Writing down your dreams, doing that, and then sit there and analyze where your weaknesses are and figure out how to work around them. Like giving you some suggestions, but remember, every person's different, so you got to figure out which way is going to resolve it for you. So you got to figure out what was going to work for you. And these are suggestions, doesn't mean it's going to work for you if you didn't do it. We even had one student, we sent him to a psychologist, that didn't work, so then we sent him to hypnosis, and that worked, hypnotist. So, it depends on what your issues are with discipline, but one thing never, the faster you get disciplined, the quicker the path to being consistent. The longer you take, the longer that path is. So that's the question. How long do you want this journey to be?
Right. Yep. And you really have to open your mind. I can almost remember back to when I would shrug when someone would mention hypnosis to me. I would be like, oh, are you freaking kidding me? But now I would never discount that because of what I've learned about how the mind works and what we do. One of the turtle traders, I can't remember which one, it may have been Richard Dennis, said, everyone gets what they want out of the market, and it's just remarkably true. You have to really, some people just don't feel like they should find success, and they literally can cripple themselves or penalize themselves or cause themselves to fail, self-sabotage. That could be a whole webinar in and of itself.
Oh, yeah.
Futures Operator says, what specific suggestions can you make to help somebody follow their own rules when they're having trouble doing so?
Well, Futures Trader, unfortunately, I don't know you, and it's hard to sit there and say this, this, this. Anyone that says you do this, this, this without getting to know you is going to tell you who are. Because every person's unique. You know, I slap my students left and right. You know, there's a penalty every time they deviate. So there's got to be a consequence every time you deviate, and you got to figure out what consequence you could sit there and enact in order for you to sit there and become humble and learn from it.
I see a couple of questions from people asking about Forex brokerages. Do you want to comment on what you think? How do people find a good place to start if they heed your warning and want to start with Forex?
Yeah, I don't comment on Forex brokerages out there at all. You know, reason why is I'm not linked to anyone. I don't want to be. My goal, my comment to you is find Forex brokers, investigate them, make sure they're sound, make sure they're registered with the NFA, which is the National Futures Association, so your money's a little protected, you're under regulations. Also, one key aspect I'll tell you now on Forex, make sure that they have 5 trading days to a week instead of 6. If you look at a chart that has 6 trading days to a week, the charts are going to be distorted, and it's going to really mess up your technical analysis. So make sure you choose a brokerage that has 5 trading days per week.
Michael says, you say it's important to eliminate emotions in trading. On the other hand, I have heard from other psychology coaches that it's impossible to eliminate emotions, and that emotion is behind every action we humans take. You know, I remember reading Dr. Brett Steenbarger, I think, said something very similar. He says that you cannot eliminate emotion from trading because it's, you know, you want some level of emotion, but you just have to be. I forget how he said it. You know, he's so elegant. I love that guy. His books are fantastic. If you haven't read them, he's really some great author and some great books. But I think he said something to the effect of you just have to learn how to know yourself, you know, and how to know when to pay attention to the emotions that you're feeling and when to discard them. What do you think?
Well, remember, I purposely work around every one of my weaknesses, right? So how much emotion would you think I could get with looking at a chart for only 3 seconds? Not much, can you?
Right. Yep.
If you only look at a chart for 3 seconds, you really can't get emotional, can you? Because you're in and out. So that's the way I completely avoid emotions. You guys got to understand, you got to be a computer. You have to sit there and just implement your trading plan. And the only way you can is, believe it or not, with no emotions. Go in, get out. Go in, get out. Go in and get out. And you just got to do that religiously.
George wants to know if you have any other free trading webinars and where do you show your strategies. So you can mention your website.
I'll quickly show this, but here's my website here, which is ichimokutrade.com. If you go into education videos, there's tons of videos out there. There's market outlook videos. We got workshops and stuff like that. If you go to the blog, you'll see us blogging stock options, Malaysia stocks, UK stocks, Singapore stocks, currencies, futures, Brazil, everything here. We talk about reward risk ratios. We talk about everything, entries, exits, everything. So this is continuously updated by me and my students. And we do this every week. We're continuously updating it. So you guys could look at it here and you could see everything that we're doing.
Thank you. Fernando says, when we get started, we focus on money as the main objective. What do you do in order to evolve from there? How can you remove money from your head?
First of all, you don't think of it in terms of dollars. The institution never thinks in terms of dollars. They think in terms of percentages, right? If you think in terms of percentages, you're going to be thinking in terms of reward risk ratio. 3 to 1 is 300% of risk. So you got to think percentages, not dollars. Because you got to understand, you can't allocate 100% of your account in the market. If you do, you're asking to be blown out, right? Institutions typically only allocate 23% of their money in the market. Right? And the reason why is due to margin. So at that point, they're thinking everything in terms of percentage based on risk. So when you enter a trade, you got to be thinking reward risk based on your risk. Percentage is based on risk. And that's how you should be thinking. And if you sit there and continuously keep on looking at trades, trying to do 3-to-1 reward risk ratio or so forth, and you continuously keep on putting them on, and your technical analysis is good and proven with time, then you will have a high probability it's going to work and move forward.
Brock?
Remember, I'm assuming your technical system is profitable in the history. If it is, then it's going to be, then the high probability it's going to be profitable for the future.
Brock is asking, do you have a specific trading journal template that you prefer or recommend, or do you have something posted somewhere?
We have it posted, but it's more based on our technical system, more based on Ichimoku. But the things we have in there is date, time of entry, entry price, stop price, preserve mode, where you're going to basically tighten up your stops, reward risk, initial reward risk, and then at that point, that's when we place the order. When we enter the order, you're going to basically give us date, time for that, what price you entered, what the reward risk is going into the trade, not when you place the order, but actually when you physically enter. What else is there? And then we have some indicator information there, and then when you exit, you do the same thing.
Okay, and I just sent to the room one that's been worked on by the community. You might check out, Brock.
Okay, great.
Sam's asking, do you have any opinion about how software programmers fit into it? You know, we're talking about military and pilots and CEOs. What about software programmers? And I want to add to that real quick. So you talked before about being disciplined and rigid and et cetera, et cetera, et cetera. And we never did have a chance to discuss it. And your last webinar was solely focused on automated trading. But I want to just briefly pose the question to you. What about the people that view themselves as the weakness, and they say that in order to eliminate this weakness of emotion, that they're going to develop a automated strategy, and they put all of their energy in automated strategies, and you know, these people are not yet profitable as far as discretionary traders. They've just said, hey, I'm the problem, I want to automate. What do you say to those people?
Well, this is a comment I have, and this is a personal comment in trading and in life. You got to conquer your fears, and if you don't conquer your fears and you work around them, it's still going to come back and haunt you sooner or later. So if you're avoiding your fear of you being a weakness in trading, you got to conquer it. If you don't conquer it, you're going to be doomed. If you go down the automated path, then you could go down the automated path, but now you're going to sit there and spend 6 months to 8 months in programming it, testing it, blah, 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 blah. But at the same time, when you go down an automated path, how much can you really automate and replace the human mind? So it's a give or take type of scenario, right? And then the other thing is, you know, are you a programmer? Some of you guys aren't. So then you have to involve someone else, and then are they going to understand what you're trying to do?
Right. And anybody that's interested in the programming side or the automated side, Manesh did a really fantastic webinar a couple months ago on BMT. You can find it, and I definitely encourage you to check it out. Okay, Rob wants to know what's the best way to overcome the I need to be a winner syndrome.
Well, if you think you're a winner every day, well, why do you need to overcome it? You're a winner every day. Why do you need to sit there and become a winner? You're a winner every day. When you wake up, you're winning. You're alive. You're breathing. You're trading. That means you're healthy. So you're already a winner before you even look at charts.
It's a good point. It's actually very true. It's as true as you want to make it.
Yeah. It's what you believe and how you believe it. And then if you're sitting there trying to become a winner, who do you want to be a winner to?
Right.
Who's your perspective? I mean, who are you trying to prove that you're a winner to?
Right. Who are you trying to impress?
Yourself. You should.
Right.
Yeah. Who are you trying to impress?
George asks, do you have any book recommendations or any trading psychology books that you recommend?
One book, which is mandatory reading from all my students, Reminiscence of a Stock Market.
Okay. And for those that haven't read it, it's definitely about psychology.
Yeah. My students mandatory required reading every 3 months for the rest of their lives.
That the same book over and over?
Same book. It keeps them in check.
Yeah. You know, it's a sad story about him, but It really is a great book. And those are the kind of books that I really prefer. I don't like methodology books. If a book has too many charts in it, I am not interested. I have my own method. I want books that talk about the psychology side, especially that talk about, well, I think I already mentioned the crowd behavior and any type of human patterns, also money management, risk management.
Yeah. I want to play something, Mike, after we're done for everyone. I kind of want to play this, and I think this will answer everyone's. I want you guys to watch this comment from Will Smith, and I want you guys to understand what it takes to be a leader in this business and what it's going to take to become consistent, profitable traders. And this is a great, great video that kind of depicts what characteristics you need to have in order to be a successful trader.
I have a great time with my life, and I want to share it. I love living. I think that's infectious. It's something that you can't fake. Greatness is not this wonderful, esoteric, elusive, God-like feature that only the special among us will ever taste. You know, it's something that truly exists in all of us. It's very simple. This is what I believe, and I'm willing to die for it.
Yeah.
Period. It's that simple.
I know who I am, and I know what I believe.
I know who I am, I know what I believe.
That's all I need to know.
And that's all I need to know. So from there, you do what you need to do.
Yeah.
You know, and I think what happens is we make the situation more complex than it has to be.
Because we're looking for complexity. There's got to be something complex to understand.
It can't be that easy.
No.
We didn't grow up with the sense that where we were was where we were going to be. You know, we grew up with the sense that where we were almost didn't matter because
we were becoming
right. Something greater.
The separation of talent and skill is one of the greatest misunderstood concepts for people who are trying to excel, who have dreams, that want to do things. Talent you have naturally. Skill is only developed by hours and hours and hours of beating on your craft.
I've never really viewed myself as particularly talented. Where I excel is ridiculous, sickening work ethic. You know, while the other guy's sleeping, I'm working. While the other guy's eating, I'm working.
There's no easy way around it. No matter how talented you are, your talent is going to fail you if you're not skilled. Mm-hmm. You know, if you don't study, if you don't work really hard and dedicate yourself to being better every single day, mm-hmm. you'll never be able to communicate with people, with your artistry, the way that you want. So
the only thing that I see that is distinctly different about me is I'm not afraid to die on a treadmill. You might have more talent than me, you might be smarter than me, but if we get on the treadmill together, right, there's two things. You're getting off first, or I'm going to die. It's really that simple.
One summer, his dad tore down a brick wall on the front of his business and told 12-year-old Will and his 9-year-old brother to rebuild it, a job they said was impossible. It took them 1.5 years, but they did it.
And he said, now don't you ever tell me it's something that you can't do. You don't try to build a wall. You don't set out to build a wall. You don't say, I'm going to build the biggest, baddest, greatest wall that's ever been built. You don't start there. You say, I'm going to lay this brick as perfectly as a brick can be laid. Yeah. And you do that every single day.
And soon you have a wall.
And soon you have a wall.
You know, it's an idea that my grandmother
always said that if you're going to be here, then there's a necessity to make a difference. She always instilled the responsibility, the spiritual responsibility that you have to make every group you come in contact with better.
I want to do good.
Yeah.
I want the world to be better because I was here. I want my life, I want my work, my family, I want it to mean something. And it's like, if you are not making someone else's life better, then you're wasting your time. You know, like your life will become better by making other lives better. I want to represent an idea. I want to represent possibilities. I want to represent the idea that you really can make what you want. One of my favorite books is The Alchemist, Paulo Coelho. And I just believe that. I believe that I can create whatever I want to create. The first step before anybody else in the world believes it is you have to believe it. There's no reason to have a plan B because it distracts from plan A. I think that there's a certain delusional quality that all successful people have to have. You have to believe that something different than what has happened for the last 50 million years of history, you have to believe that something different can happen. Confucius said, he who says he can and he who says he can't are both usually right. Being realistic is the most commonly traveled road to mediocrity. Why would you be realistic? What's the point of being realistic?
Just put up a barrack.
Yeah, I'm going to do it. It's done. It's already done. The second I decide it's done, it's already done. Now we just got to wait for y'all to see.
It's unrealistic to walk in a room and flip a switch and lights come on. That's unrealistic. Fortunately, Edison didn't think so. It's unrealistic to think you're going to bend a piece of metal and fly people over an ocean in that metal. That's unrealistic. But fortunately, the Wright brothers and others didn't believe that. And it just seems like such a ridiculous idea to me to embrace the idea that it's not going to happen. That's not real for that to happen. As soon as you say it, now you just made that real. Our thoughts, our feelings, our dreams, our ideas are physical in the universe. That if we dream something, if we picture something, if we commit ourselves to it, that is a physical thrust towards realization that we can put into the universe. That the universe is not a thing that's going to push us around. That the world and people and situations are not something that are going to push us around. That we are going to bend the universe and command and demand that the universe become what we want it to be.
I study the patterns of the universe. There's a redemptive power that making a choice has, rather than feeling like you're at effect to all the things that are happening. Make a choice, right? You just decide what it's going to be, who you're going to be, how you're going to do it. Just decide. And then from that point, the universe is going to get out your way. It's water. It wants to move and go around stuff. There's a flow of the universe that I've grown to know just how to go with it. I realize that to have the level of success that I want to have, it's difficult to spread it out and do multiple things. It takes such a desperate, obsessive focus. You really got to focus with all of your fiber and all of your heart and all of your creativity. I'm motivated by fear.
Fear.
Fear
of what?
Fear of fear. I hate being scared to do something. And I think what developed in my early days was the the attitude that I started attacking things that I was scared of.
It was Franklin Roosevelt said the only fear you have to fear is fear itself.
Absolutely.
Remember that?
Absolutely. Yeah. You can't be scared to die for the truth. The truth is the only thing that's ever going to be constant. Don't ever let somebody tell you you can't do something. Not even me. All right? You got a dream, you got to protect it. People can't do something themselves. They want to tell you you can't do it. If you want something, go get it. Period.
Okay, so with that, Manesh, really appreciate your time once again today, and encourage everybody to contact Manesh if they have any other questions. What was your email address again?
It's mpatel@eiicapital.com.
Okay, guys, I'll see everybody. All right, and I'll post it on the thread too. So I'll see everybody on the forum, and whenever they watch the webinar, then I'll put the video on there. My dog is becoming impatient, so I got to go. All right, thanks, guys.
Thank you. Thank you, Mike. Thanks, everyone. Bye-bye.